Good. So how are you today?
Doing good.
Yeah,
Fine, sir.
I wish to welcome you to this week's lesson. Want to make a few announcements that Cat 1 was done last week on Thursday, 5 to 6. As we did promise, you people, some of you made fun of it and did not sit for the cat. For those of you who sat for the cat, you have your results. We appreciate. And for those of you who didn't do very well, like I had somebody scoring 0, somebody scoring 1, 4, 10. So if you got anything below 15, then you did not perform well. So you need to pull up your socks and do well in the subsequent continuous assessment. I want to announce that for those who did not sit for the cut, kindly register with your class reps and let me have the lists of those who did not sit for cut 1 on my desk by Monday noon. I wish that as the class reps record as follows: registration number, the name, and the reason as to why you missed cut 1. I repeat, class reps register for those who missed cut 1 in the following order on your list: registration number, the name, and then the reason why they missed cut 1. This will enable me make a decision. But in the meantime, we will not give a makeup cut for cut 1. I want to wait and see those who will not perhaps attend cut 2, and then I deal with all those who will have missed either of the cut 1 or cut 2 at once. Perhaps we may have a makeup cut at the end of the course, or if not, we can see what to do. Otherwise, the cut 2 will be coming by the last week of this month. I'm making this announcement because we already announced when our cuts will be done. And we wish that we complete
At the end of this month,
our cuts on time. Let us not create excuses. Let us not do what is not expected of us. The last time we met for classes, ladies and gentlemen, we were looking at taxation. And for a quick review is that we defined a tax as a compulsory contribution, which is imposed on individuals to meet the expenses that are incurred for a common cause. Meaning that we put together resources, we put them in one basket, and we spend from that basket on those activities or items that are considered to be of common cause. We did see that tax is the main source of government revenue. And as we discussed this, I told you that let us reflect over what is happening in our country, because we must finance the activities of the government. We must finance for the government to meet its functions. And the functions, as we did say, are 4. 1 is the protective function. 2 is the social function. 3 is the administrative function. And finally, 4 is the development function. We did see that because of those functions, the government must therefore generate income and spend. We redefined therefore public finance as to include public revenue and public expenditure. We saw under public revenue the incomes, tax was one of them, fees, prices, state property, internal borrowing, and then external borrowing with grants and grants in aid. We did see the principles that govern public expenditure, the 5 of them: the principle of economy, the principle of sanction, principle of surplus, then maximum social benefit. And finally, we did say that all government funds must be audited. That's sound financial administration. So we started delving into this concept of taxation. And out of the definition, therefore, 2 things emerge: that a tax is therefore compulsory and there is no direct service against the payment. That despite you compulsorily paying for the tax, you cannot demand for equivalent in terms of proportionate service from the government. To this end, therefore, we looked at types of taxes: income tax, corporate tax, sales tax, excise tax, and then custom duty, among others. So we wish that we proceed from where we left, because we want to look at income tax as one of the important taxes that the government uses to generate income. But also we looked at the principles that guide taxation, and we said that the first 4 principles were given by a great economist called Adam Smith. This is the principle of equality, principle of certainty, principle of convenience, and principle of economy. The remaining 5 were developed out of these 4. And if you looked at them, they are only expounding and simplifying these 4 principles of Adam Smith. They include productivity, buoyancy, flexibility, diversity, and then simplicity. We did explain this, and it was even in your card. So as we looked at this, we said that a good tax system is that which meets most of these principles of taxation. And therefore, a worst one is the one that does not meet any of these. But we also discussed and said that yes, the percentage proportion of tax revenue in relation to the gross domestic product in what we now call developing countries, where Kenya falls, is lower than those in developed economies, like the US, the Britain, and what have you. Why is this the case? The main reason is because of the high tax rates. What happens with the high tax rates? High tax rates tend to increase government funds. The government wishes to generate more, meaning that citizens in these countries are heavily taxed. And as a result, they either resort to evade or avoid. Tax evasion, you capitalize on the loopholes. Tax avoidance, and therefore tax evasion is a legal process. Tax avoidance, when you just refuse completely, it's an illegal practice. So people evade paying tax by capitalizing on certain loopholes that exist in the tax system. And the loopholes were categorized as being that of information gap that is inadequate, complicated tax laws, which we said the laws must be simple for people to understand and for the government to administer. People conceal the true ownership. They invest in other people's names. There is always an imperfect tax administration because all of us are human beings, and as human beings, we are amenable to temptations. To an extent that when they come around, you give them something and they can easily write off your tax obligation. Then, of course, politics and political affiliations. If you say ni wewe tu baba, wewe ndio ulipita kura baba, so baba will protect you. Look at what he did to the Kemsa people and others. Contributions to those non-government organizations. People are importing things, importing in the name of NGOs. Look at the churches. They bring in things in the name of helping the poor, helping the orphanages, the street children, but they end up in our market. So this is a loop. But how do we go about this? That we need to have proper definition of income, and we must put appropriate tax laws that meet the 9 principles. That we must reduce those incentives for tax evasion. How do we do this? We may lower tax rates, and we may supplement income tax. So we need also to have a comprehensive return on personal account, and this is why you are filing tax. The Kenya government has done this. You are filing tax returns every year. That we need to have compulsory auditing of high income taxpayers and assigning code numbers for each. The Kenya government has done this one. That's why you have a personal identification number in the name of the KRA PIN. Once you are age 18, you go for the KRA PIN. Then donations for political parties to be taxed, and all accounts of those parties and other NGOs to be audited. Auditing these days is being done. And most importantly, is the penalty for tax evasion, that we need to make it more punitive. How do we make it more punitive? We increase the penalty. Then there's something we call bracket creeping. That during inflation, there's need for us to increase the government to increase the salaries. So from the buoyancy principle, when national income increases, the tax also increases proportionately. So with increasing people's salary, people will also pay more in terms of tax. And finally, there's need for us to look at the tax brackets and have frequent adjustments. They were adjusted recently in the current financial bill of 2023. And when this happens, then we did see that new tax rates were brought, and people are now doing things, paying the new tax rates at the highest band, 25. But somebody may ask, what monetary measures can we use to curb inflation? Because inflation is the key thing. We looked at public finance. So one measure that the government may use is that of raising the tax rates. That we can increase the tax rates, and this is what we referred to in the tax brackets. That we may also sell the securities in the open market. We shall see something about the stock market and how it generates income and how it supports the growth of the economy. That we may also increase the reserve ratios. This is what is kept as reserves, and also raise the margin requirements. That we need to control credits, especially those that are consumer in nature. And perhaps we demonetize the currency. We call this one devaluation of the currency. So if this happens, then the currency will gain, and we shall have a better control of inflation. Then we can also exchange one for a number of notes for the old currencies. Remember what Uhuru Kenyatta did? He changed the currencies. The 1,000 shilling note, we changed it. That was a way to curb inflation. These are things that have happened, and these are things that are there. So we need to follow them up. And I will ask you a question about that. So let us be very keen. Let us be careful as we monitor our government. So today, we want to start off by looking at the income tax and see to it that we understand its computations, and see to it that we understand when we say we are heavily taxed. So how do we go about this, ladies and gentlemen? That income tax is the tax that is imposed. This is a tax that is imposed on the earnings of individuals. A tax imposed on the incomes of individuals. So if you earn an income, then you are bound to pay this tax. And what is it that we are referring to as a tax? Ladies and gentlemen, a tax on income is a tax on anything that you receive. May it be from salaries, may it be from wages, commissions that you earn, interest on your investments and savings, dividends on shares, and the like. So anything you earn is an income. And therefore, income is the totality of what one receives. So as we look at income tax, there's need for us to understand the basic concepts that go about with the income tax. Under income tax, we shall be talking about gross income. When we talk about gross income, we mean the totality of all that which is earned by an individual. What is it that this individual is entitled to as income? May it be in a month or may it be in a year. So all that which that consists of the basic income and all the allowances of an individual constitutes the gross income. Then we have something that we call the relief. Every individual under the tax policy, the tax law, is entitled to a relief. A relief is only but a discount. What is given to an individual as a discount? And it normally takes the form of personal relief or family relief. Anything that we get as a discount, that is what we are saying. Then we have taxable pay. Taxable pay, this is what is subjected to tax. What is it that is subjected to tax is what we refer to as taxable pay. From all that which you earn, what proportion of that you have as gross income is subjected to tax? Not all that which you earn is subjected to tax now. That all that which you earn is first subjected to exemptions. These exemptions are what is registered with the Commissioner of Income Tax. Certain insurance policies, like especially if you have taken a life insurance, you will not be taxed now, but you will be taxed at the right time of receiving that income. So you are exempted of it now. The condition for exemption is it must be registered with the Commissioner of Income Tax. And therefore, we take all those that are registered, they are exempted from taxation now from the gross income for us to get the taxable pay. Then what about the tax liability? This is the exact amount that you are now supposed to pay as an individual. How much tax are you paying? This is what we call tax liability. To this end, therefore, we must subject the taxable pay to the various tax rates as given in the tax schedule, the tax brackets. Once we get how much tax you are obligated to pay, then we give you that relief, that discount. Whatever we get is what gives us your tax liability. And finally, of course, the end of it all, we must find out what is it that you need now to earn as an individual. So the net income is the final amount that you receive after all deductions. And these deductions will be the tax you pay, the contribution to registered schemes, if any, and any other commitment that you have made to your salary or to your pay slip. To this end, therefore, net income will be gross income minus all those deductions in form of the tax that you pay, the contributions you pay to the registered schemes, what you did, the loans, and what have you. That is how we compute the net income, or otherwise the take-home package. But of importance, what I want us to look at, we have said that this statement is here, and I even quoted it. The percentage proportion of tax revenue in relation to gross domestic product is less in developed countries, such as Kenya, than those in developed countries. Why are we saying that we people in developing countries are highly taxed? Because of the high tax rates. And as we look at income tax, we want to see what proportion is it of the basic salary. You'll find that perhaps you are working for the government. You are not working for yourself. The government is only facilitating you to do what it wants you to do in the name of employment, but it's not paying you for the work that you are doing. The government is only keeping you busy, as we shall see in the subsequent examples. So let us see how do we go ahead and do the computations. So ladies and gentlemen, we wish to look at this example that somebody is a personnel manager in a certain company and he earns some salary. The salary which is provided. So he's earning a basic salary of 26,000, house allowance of 20,000, subsistence allowance of 2,500, responsibility allowance of 4,000, car allowance of 800. This person is entitled to a medical allowance of 5,000. He is contributing 10% of basic salary to a registered pension. You see, we are told that it's a registered pension. He is paying 320 to National Hospital Insurance Fund. We are not told if it's registered. Then he's paying 500 for service charge. She also contributes 1,000 to a cooperative for shares. And she has now a personal relief. This person is entitled to a relief of 1,056 per month. So we are asked to get the gross income per month and for the whole year, the monthly and the yearly taxable income, the monthly tax liability, and her take-home package per month. So how are we going to do this? We are going to do this on the basis of a provided tax schedule. And the tax schedule provided is from 1 shilling to 10,800, it is taxed 10%. From 10,801 to 21,600, 15%. From 21,601 to 32,400, 20%. Then from 32,401 to 43,200, tax 25%. And finally, anything above 43,201, this person is taxed at the rate of 30%. So we need to see this and then now respond to the questions as asked. One, the gross income per month and per year. The tax liability per month and per year. The taxable, monthly taxable income. The taxable income. Then the tax liability, we are asked for the month, and then we need to get the net income or the net take-home package. So these are things that we want to see. And as we look at this, let us now see the calculations that go about with this, as in this example. So let us, we are told, we are told that Olive earns the following: basic salary, the basic salary of 26,000. Then he has house allowance of 20,000. He has subsistence allowance of 2,500. This person has a responsibility allowance of 4,000 shillings. Then the person is also entitled to a car allowance. Car allowance of 8,000 shillings. So as we look at this, what is our gross income? Gross income is all the totality of what this person earns, and therefore we add all these. So if you add all these, you will get 500. This is 8, 12, 20. Then this is 6. This person earns a total of 60,500 shillings per month. Per month. So if we have to get the monthly gross income, so the monthly gross income will be 60,000 per month. In a year, then we multiply this by 12. So if you multiply this by 12, you'll get about 720,000 per annum. Per annum. So this is gross income per year. This is gross income per month. Gross income. So in a year, he will earn 720,000. And in a month, he's earning, no, this is more. 6,000, 726. 706,000. So this is what the gross income will be. And that answers part A. Part B of the question is asking us to get the taxable income. How do we get taxable income? This is the gross income less contribution to pension schemes. So we say minus contribution to registered schemes. So we don't know how many are there. So for our case, we have gross income given as per month, therefore, is 60,500. So we need to subtract contribution to registered schemes. We go back to that question. What are we given? We are given pension as registered. So we subtract less 10% of basic salary to pension. So 10% of basic salary to pension. So what is 10% of basic salary? It is 10% of, we are given basic salary of 26,000. So what is 10% of 26,000? That is about 2,600. Did we add here medical allowance? We had a medical allowance of 5K. Yes. Oh, we forgot one. Medical allowance 5K. Please correct. So this goes to 65. 65 times 12. This is 65, 10, 13. This 780 plus 6, 786. Medical allowance, sorry, we had forgotten medical allowance. You check all the receipts of that employee or individual. So if we work out gross income, which is 65,500, less 10% of basic salary, which is 2,600, what we now get as the taxable income shall be 0, 0, 15, 9, 4, 2, then 6. So we have 6,200 as the taxable income. So out of the 65,500, we are going to tax 62,900. What are the tax rates that we are given? Let us see the tax rates that we are given. I can use a different color. From what to what? We are told that the amount and then the rate from 1 shilling to 10,810%. From 10,801 to 21,615%. From 21,601 to 32,420%. From 32,401 to 43,200 is 25%. Then above 43,201 and above is 30%. So that is the tax schedule that we are supposed to use. And we are going to use this table to tax 62,900. So our tax calculation in C, because this is 62,900 per month. So if it's per year, we multiply this by 12, and what we get now would be the per annum or the per year. So we are going to tax, and we subject this tax on a monthly basis. So we are taxing 62,900 using the tax schedule, the tax table that is provided. So we want to see what is the amount, then what will be the tax. So from the table, we have the first 10,800 at 10%. Because this from 1 to 10,800 at 10%. So that gives us 10,800 at 10%. So 10% of 10,800, this gives us 1,080 as the tax. Now, we have only taxed 10,800 of 62, which means we are left with 62,900 minus 10,800. That gives us 100, then 5. We are left with 52,000. So this 52,000, we take it to the next bracket. The next bracket is, if you check 10,801 minus 1, it gives you 10,800. if you check 1,600 minus 10,800, the way we are looking at statistics, how we are getting the class height. So we are taking this minus that. So it will give us also 10,800. So we talk of the next 10,800 at 15%. So we are getting 15% of 10,800. So that is like 105 times 15. This gives us 105, then 25, 5. So this 15,000, those are 2. Yes. So this gives us 1,575. So our tax here would be 1,575. So we have taxed only 10,800 of the 52. So minus 10,800 of the 52, this leaves us with 0, 0, 11, 3, 11, 5, 4, 3. So we are left with 35,000. Confirm the mathematics. Oh, this 10. It should be 10,000. So this 3, remainder is 1. Here is 1. Then here is 4. We are left with 41,300. So this 41,000 will apply in the third tax bracket. And if you check the range of the third tax bracket, 21,601 minus 10,801, or 32,400 minus 21,600, that still gives you an equal bracket of 10,800. So we talk of the next 10,800 at 20%. So we have 20% of 10,800. That means we have 108. 0 by 2. Is 0, 16, 2. So this would give you a tax of 2,160. 2,160. So for the third bracket, we are going to be taxed 2,160. So if we subtract 10,800, this is 0, 0, 13, 5, 0, 3. So we are left with 30,500. So the next 30,500, we tax it in the next bracket. And the next bracket is 32,401 to 43,200. So if you act out, still you will get 10,800. So that's the next 10,800 at 25%. So we want to get 25% of 10,800. So that means you have 108. You have calculators, you can work out this by 25. This is 108. This is 40. Then 5. So this gives you 1620. So for the next 10,000 at 25%, this gives you a total of, how come it's low? It'll be more. This and that is 40. This and that is 5. This and that is a 0. That's 0. That's 16. 20. Die error something. 108 by 20. 108 by 20, that is 15. By 25, it will be more. That is 0, 25. Yeah, you can check with your calculator so that we see. I found this is a bit wrong. 25 times 108. 25 by 108. Can I calculate? 25 by 108. I doubt if it gives us that. But you can confirm. So we have taxed 10,800. So this leaves us with 0, 0, 15, 7, 9, and then 2, 1. So we have a balance of 19,700. So 19,700 is going to be taxed on the excess. So the excess, what is above 43,201 and above, so the excess is 19,700 at 30%. So this 19,700, so that will be 1970 by 3, 0, 21, 27, 29, 3, then 3 plus 2, 5. So this is going to be taxed at 5,910. So you add all this. You add all this. So when you add all this, I don't know what you get, but this should be 5 if it was correct. 15, 21, 22, 23, 24. Carry 2, 7, 8, 14, 23, carry 2, 3, 4, 5, 6, 7. 7 plus 5 is 12. So this is the tax that is supposed to pay. Then we subtract, because we have a relief, less relief. And we are told in that question that the relief this person is entitled to is 1,056. So that gives us a tax liability of, this is 15 minus 6, that's 9. 13 minus 8, minus 5 is 8. Then a 2, then a 1, 1. So this is what is supposed to pay as the tax liability per month for that case. Please confirm there is a problem somewhere here of these two. Confirm these two, because it should be progressive. This one is the first one is 1080. Correct. The second one, this is 16, 20. The third, the fourth is 2,700. And the third, that should be 2160. It should be 21. Should be like that. Please work with the correct figures. I did not work out this. So work with the correct figures. Work with the correct figures. Work with the correct figures. This red one in a kaukaraka. Work with the correct figures. And therefore now, when we look at the last bit, how much does this person earn? You can correct that one. So the net income, this should be number D. We have our gross income, which we got as 76. That was 76,000. 65, sorry. 65,500. So less deductions. So for deductions, number one, we have pension. Pension, we did calculate and we got 2,600. You have tax. The one you have calculated here. You are calculated on a pattern gap. I think I'll have a calculator. Please, if you add this, what you get the correct figure. Assuming it's what it is, 12,345. Then we have those other deductions. NHIF, 320. Then we have savings, 1,000. Then you have shares. Savings is 500. Shares, 1,000. So we have NHIF, pension, savings, cooperative shares. So you add all these. What you get is 5. Next, that is 6. And that's 12. 12 plus 5, 18. Carry 1, 4, 5. Then 3. This is 4, 5 plus 1 will be 6. 6. Then this 5, that will be 6. 16. So 65,500 minus 16,000, that will give you a value here. That is the net value. That will give you a value that is net value. So you add all this and get the total. Add all this and get that total. Because our gross income is what we got from A per month, 5,500. Our pension is a deduction which we got as 2,600. Then our tax is what we have gotten here. Our tax is what we have gotten here. That's 11,289. Then NHIF we were given, savings we were given, shares we were given. So we add all these to get the total here. So this minus this should give you the net. Please do it accurately. This minus this should give you the net income for that part. Do yours accurately, because I don't have a calculator, but I'm going to work on the next one also, so that we get the correct taxing. For the first, we are using the first bracket. Then what is left? 52,100. We take the next. We tax it at the next bracket. The third, we tax it at the third bracket. The fourth, we tax it at the fourth bracket. The fifth, we tax it at anything in excess at 30%. So once we do that, then we will get our total tax. This is what we are supposed to pay. But this person is entitled to a relief, a discount, which we are given. So what is supposed to pay minus the discount gives you the actual. The actual tax paid is what we refer to as the tax liability. That's what the actual tax that the person is supposed to pay. In terms of computing the net income, we look at all that which you have earned minus all the deductions. Because net income is equal to gross income minus all deductions. So the deductions are: 1 is pension, 2 is the tax, 3, those other deductions and obligations, financial obligations that the individual has. So we get that total, then subtract from the gross. What we get is what gives us the take home or otherwise the net income. That is what we are talking about. This might look jumbled up, but let us do another example, which I'm also going to work out to see if we get the same results. We look at example 2. I can move from that screen. I don't want to move it. The host is not allowing nobody. Please, if you act out. If you act out, then we have the results here. Gross income 65,500. Buy it, worked out. Can I do it again, come back? Yes, mama. Ulipita interview moja yangu. Kwani unakosaje kujua na watu wa interview ni hapa tu. Hata hiyo inaenda kukauka. Kama futa hiyo red kwanza ni mbaya sana. Mimi naona. Red hiyo mbaya sana. Hiyo red ni mbaya. 05. I'm not allowed to unmute myself. here. Okay. Sorry, we had the internet breakdown. So this is the working. That for gross income is 26,000 plus 20,000 plus 2,500 plus 4,000 plus 8,000 plus 5,000. This gives you a total of 65,500 per month. So per year is 65,500 per month times 12. That gives you 786,000. In terms of the taxable income, so this gross income minus the contribution to registered schemes. And here we are given the pension. And pension is 10% of the basic salary. So the 10% of basic salary gives us 2,500. From the gross income, that gives us 62,900 per month. So per year is 62,900 times 12. That gives us 754,800. Please confirm you're working. Now, how do we go working? My internet is not stable. So I reshare the screen again. 0, 5, 8, maybe fast. 0, 5, 0, 5, 8, 15, 1. Are you seeing my screen? Hello? So what we are saying is that we are sorry because of the internet fluctuations, but we are in. So we are looking at the taxable income, gross income minus pensions. So that gives us a total of 62,900, and therefore annually is 754,800. So in terms of tax computation, we have the first 10,800 at 10%, the next 10,800 at 15%, and that gives us a total of 10,800. So if we reduce that by relief, so the tax paid is 9,744. And then in terms of the net income, for the net income, we have the gross income of 65,500. We have tax of 9,744, pension of 2,600, NHIF of 3,320, service charge of 200, cooperative shares of 1,000, the NSSF of 200. That gives us a total of 14,000. Subtract, then you get a take-home package of 51,436. So that is how that should be worked. You can attempt example 2, then we compare the results. Attempt example 2. Attempt to do example 2. Please attempt that. But now, Lutegori, I don't know what you are saying in your message.
Gross income base plus allowances.
Equal allowance 3,000. Car allowance 3,000.
So are we using the same tax schedule?
Please work out that.
So are we using the same tax schedule?
4,000 plus 20,000.
No, yes, because I'm on the asking.
2,000.
Yes,
One.
Are we clear there?
Tax charge.
What about the tax schedule?
Repeat what? Please use the tax schedule provided.
Hello.
Okay, one.
Use this tax schedule. The same.
Commission. Obvious. Oh.
Please use that tax schedule.
Ila kweli nimekomisi.
Use that tax schedule.
Employer
Employment the following deductions. Deduction 1. We have 430 to NHIF. 5% basic salary pension scheme. 5% of 5% of basic salary. Then 3% of basic salary cooperative for shares. Cooperative.
Kindly show the screen.
Somebody is working for us.
Yes, it's
Display the question.
Yeah, show the questions now.
So have you captured
The tax
tax
rate.
schedule?
Yes.
No.
The question is there.
Yes.
Gross income is 64,200.
Please mute if you are not asking anything. Mute kindly.
And medical came 4,000.
Can we please go back to the tax table? The tax schedule.
Hello.
Kwa kweli nimekumisi. Mbamo.
Now,
Hata na sisi Malaysia. Mimi wewe Malaysia.
Gross kama na calculator aje?
Tax charged.
Unamsikia? Newton.
Imagine.
Your answers?
Ya mwisho ilikuwa nini?
Ilikuwa hiyo.
My bundles imeisha na si nunui ingine. Natoka hivyo class.
Look at my face. Like I could have killed
3,400.
Share the schedule, sir.
Aisha,
Share the schedule.
you want me to share the schedule?
Yeah.
Nilikuwa nimeshare. Hii namna gani ndio hiyo?
Sawa.
Umeiona?
Swali ya mwisho ilikuwa nini wewe mister?
Unaona?
Net income. Oh, net income.
Niko namalizia leo help. Yana maliza.
Usiko mmeadi. So that is Spain.
Hii hesabu ni 10 marks ama.
Please let us meet your gadget.
But wait. Gross income.
Let me take you out.
Hii ni mingi bwana.
Salary plus all.
Majibu ni mingi.
Basic salary which is 20.
How do we proceed?
10.
Tax charge 12,504.
2 minutes.
Derek Wajama, what do you want? The question again. Yeah, that one is.
Nasi kama sasa ile tu yani easy bracket.
There's a question, please wind up. Check your solutions. Check your solutions. Gross income 64,000.
200. 64,200.
Yes. Check the screen.
751,200.
Taxable pay 63,200. When you work out the tax, total tax is 13,561. Let's relieve 1,056. That gives you a tax charge of 12,504.
Gross income cash. Gross
Are we there?
Yes, you're there.
Sure. Tabidi tunaenda tu calculate.
Then a net income.
Bundles yako imeisha bwana.
Net income should be 38,666.
Ndio kesa not understood.
Those are the solutions.
8.
What have you not understood?
The
Have you
bracket.
ever an exercise? What have you not understood?
Total charge. Nagumen rice.
Tax therefore is 12,504. That's okay.
Yes.
Deborah, that's fine.
Wanugo na koko, mnatupigia kelele bwana. Koko.
Nice car ni mingi bwana.
Wewe bwana, unatupigia kelele bwana, tuko class bwana.
Hello. Hello.
Kama watu wanafanya hivi. Marda, uri ungo na koko.
So are we through, gentlemen? Let us proceed. Now you can look at the following as an exercise. Look at that as an exercise. That's exercise 1.
Mwalimu sioni.
12 marks.
Unaona na unapiga kelele. Unaweza ona na unapiga kelele.
Kwani lecture ni mtaka?
Sana wanasumbua bwana.
Mtapata mimba mtatulia tu.
So please look at the following. Are you through?
Yes.
Now check my screen.
True.
These are questions that we had asked people some time back, some group. The following table shows the income tax rates for a certain year. A monthly leave of 1,172 allowed. Onyx's taxable income in the last band was 3,200 in a month. 1. Calculate this taxable income. The amount of tax he paid in a month. Onyx's salary allowance of 6,000 and a commuter allowance of 8,000. He contributed 6,000 of his basic salary to a cooperative society. Calculate his monthly net salary. Unaona hiyo swali? Mkanyamaza, si ndio? With this, I have worked out. I've already worked it out for you. So see to it that you go through it and you get those figures correct.
Zoom.
It's not clear, sir. Please zoom.
I cannot zoom.
We are going to clear.
I'm supposed to work it out.
Clear.
That's the question. You've seen the question?
Expand.
Good. There is a question. So that's exercise number 2. Is it now clear for those who wanted it to do?
I'm not seeing anything.
I've not seen what?
Anything.
The question is there. This question, exercise 2.
We've done in groups.
Thank you so much. Sawa inaonekana. Nyangate, Betseba, thank you.
The question, the lesson was very enjoyable.
Don't tell me about the lesson. We are continuing. Okay.
Hey.
So we want to proceed now. This concludes our discussion on index numbers. Can you compare the tax
What
percentage of it does it constitute of the basic salary? And if you do that, then you realize that
7 plus 8.
proportion of what is expensive, what is highly taxed. So we want to look at something else, and can I request that you maintain silence or you will all be muted? You either maintain silence, we proceed, or we mute you all. There are no two ways about it. Just one way. So let us now move to something else, ladies and gentlemen. If you are keen, you can do a process.
The lesson is not over.
How far have we gone now since we began the course? We want to see what is it that we have covered and what is it that we have not covered.
Please carry me what time.
To check. This course was designed as KUC1250 quantitative skills. I'm the one handling it. First year, first semester, that's what we looked at. Now, in our purpose, expected learning outcomes, mode of delivery, the cuts and the assessment. So our first part was statistics. We looked at all those 6 parts. Our second part, matrix algebra, we have not looked at that. Public finance, we have looked at all those functions of the government, public revenue, public expenditure, balance of payment, gross domestic product, gross national product. Issues of demography, I didn't look at them, but you look at them. Budgeting, we looked at it. Now we have looked at taxation. And if you look at taxation, we did definition with examples. We looked at principles of taxation. We have looked at tax evasion, and we have looked at income tax calculation. So we are doing an evaluation to see what is left. So we are left with index numbers. Index numbers. So we need to look at definition and examples, uses of index numbers, price indices, stock market, and then investment. So we are left with 2 parts. And I wish to cover part of these index numbers. I want to start off with the stock market and investment. Then next week, we look at index numbers, especially the price indices and their computations. So if we cover this, then we'll be left with one final part, matrix algebra. Your exam starts on 19th of next month.
Where?
You are having cut 2 the last week of this month. Please prepare and plan for it. I'll not do this as I've done for
Like wait was
the past cuts. Waje naongea na mnaongea usijali. Alafu utakuja unaanza kuniambia, "Oh mwalimu sijui nini." I'm giving instructions. Endelea kuongea. Acha tuendelee kubishana kuongea. Na wewe ndio utakuwa unakuja kulia ofisi ati, "Oh mwalimu nisaidie cut." Meka. I'm repeating. Prepare for cut 2. Coming at the last week of this month. And prepare for it well. Prepare for cut 2 and prepare for it well. We intend to complete this course because you have seen I'm left with matrix algebra and this last part, index numbers. I want to cover part of index numbers today before we break. More especially the stock market, investments, then I can deal with the definitions and examples, then uses of index numbers. Price indices calculations, we can do them first thing next week. Then we start off the last part, matrix algebra. I hope I'm clear on that. So if I go back to my presentation, we want to look at index numbers. And index numbers, this is just a value that summarizes changes in a variable. So if we want to summarize any change, then we are looking at it in terms of a ratio. And we know that a ratio can be expressed as a percentage. It therefore means that we can look at changes in a given phenomenon from time to time. We may look at the changes in terms of your performance. Say in this course, cut 1, cut 2, exam. We can measure that. And therefore, as we do that, we first of all look at where did we start. Where you began from is what we refer to as the base year. When are we doing the analysis? We are comparing where you began from up to another point B. That point B is the year of analysis. That is what we are supposed to understand. Where we are beginning from is the best. Where we are analyzing is the year of analysis. And therefore, index numbers are good because they give us the changes in the magnitude of a phenomenon as measured over time. Those changes are given in terms of ratios, and therefore a ratio can be expressed as a percentage. There are various indices, those that deal with price, those that deal with stock, those that deal with quantity, things to do with the cost of living, performance, even you as a student, production, business cycle, name them, everything has an index, a value that summarizes changes in that given variable. A variable is only something of concern, a characteristic of interest. So as we look at this, there's need for us to understand what index numbers are all about. So before we delve into the nitty-gritties of index numbers, I want to look at what we refer to as the stock market. A stock market, this is a market where we exchange shares of public quoted companies.
Share the screen, sir.
Is it not shared?
Yes.
You want me Inaonekana?
But tuko kwa just show the part of stock market, eh?
Please show us the screen. We are seeing nothing.
Show me.
Yes.
Are we there?
We are there.
Yeah, we want to look at the
Yes.
stock market. And when we talk about stock market, these are markets with the exchange of shares. We want to deal with shares. And shares are not just for anything, but they are of public quoted companies. We shall see what they are. They concern government securities. These are the bonds and the equities for those in school of business. And for stocks, we are dealing with those of municipal authorities. We shall understand what this is all about. So generally, a market for investment is provided for shares in what we call the stock market. So stock market, therefore, would provide an opportunity for us to buy and or shares and other securities. So these securities and shares, they come in form of stocks or in terms of bonds. The shares are of two types: the ordinary shares and the preference shares. Ordinary shares are for the true owners of the company. These are people who have rights to make decisions, they have rights to vote, and they enjoy the profits as well as suffering the losses incurred by that. Preference shares, these are shares owned by those people who have provided their capital, their investment. They only provide funds to the company. So the owners are called preference shareholders. Unlike the true owners who are called ordinary shareholders. So preference shareholders only bring their funds at agreed terms. They bring their funds to the company at agreed terms. Normally, these terms are at a fixed rate of interest. And therefore, the preference shareholders have no voting rights about the decisions of the company. I want to look at a company like Safaricom. Safaricom has shareholders. Equity Bank has shareholders. Kenya Commercial Bank has shareholders. We know that Safaricom, the government has shares there. And it has allowed other people also to buy shares there. So those who are providing their money to be traded by Safaricom, those are preference shareholders. Those, they are only paid a fixed rate of interest. But those who are the real owners, the ones who go for meetings and take decisions, those are the real owners, and those are now referred to as the owner shareholders. But what is it that we refer to as a share? A share is only but a unit of our owner's capital. A stock is a bundle of the minimum paid up share. Ordinarily, every day, you listen in the news, the stock market is there. You look at the local news and the social media, issues of the stock market are there. Why do we have such issues? Because stock market is key to the growth of any economy. You come to Kenya, we have a stock market. Uganda, everywhere, every country has a stock market because of the key role that the stock market plays in the growth of the economy. This is brought about by that smallest unit of owner's capital that we are referring to as a share. And the minimum shares that one can hold, what we are referring to as a stock. So stock market is looking at the minimum shares, or otherwise the minimum unit of contribution in an investment that we are referring to as the stock market. So why must we have this stock market? It provides a ready market for those who buy and or sell the share. Stock market will spread risks as you may invest in diverse companies. This is good because some companies that may go under liquidation, look at Mumias Sugar Company, is being liquidated. Look at the Chess Bank, Imperial Bank. Look at what has happened to them. That stock index is key because it serves as a barometer that measures the country's economic progress. We want to see how is our economic growth, how is our economic progress. When we talk of the economy is growing, the economy is coming down, what is the index? The index is normally provided by the stock market. And of course, the stock market protects the country against fraud. How is this the case? All those companies that are quoted, those that participate in the stock market, are required by law to publish their account. So if there is any discrepancy, then that must be realized. No wonder if you open the newspaper, you will see companies have given their financial statements, their balance sheets, trading profit and loss account. Why are they doing that? It's a requirement by law. So they are open to scrutiny. And of course, the stock market will provide useful statistical data that will therefore assist the government to evaluate its economic performance. It also helps you as an individual because you can invest as a person, you can invest as a group, and the like. In fact, the current trend is that most people are now investing in the money market. They are not going in for those shares in companies, but they are going to have personal investment with the money market providers. People are going in to invest with the central bank, the government. They are investing with the government through the bonds, like now the infrastructure bond. What is being generated and being used? Because recently what happened about the bonds. And this is what we are saying. So stock market is a very important market for any country. The reasons why every country must have a stock market is for the 5 reasons that we have outlined. But does everybody participate in the stock market? The answer is no, because we have said that this is only for quoted companies. What are these quoted companies? Quoted companies, these are the companies whose shares are dealt with in the stock market. Such companies are public limited companies. They must be accessed by the public. Everybody can. But private companies are also allowed to participate as long as they do what we call they go public. Going public means I can establish a company called Wasike and Sons. That's a private company. We are the ordinary shareholders of that company. But now we can open it up for the public, the ordinary citizens, to also invest in our company through what we defined earlier as the preference shareholders. They bring in their money, we pay them at fixed rate of interest. They don't partake of the profits and losses. But for them, they are paid that fixed rate of interest. They have provided their funds managed by the company. That is what it means by going public. To this end, therefore, most companies will strive to get that quotation in the market. Why is it important that you seek to get quotation in the market? Because quoted companies may raise more capital by floating more shares in the market. You see the government floating more bonds. They did for Safaricom, they are now doing for the structural bond and what have you. Even private companies, they can float more shares to raise more capital so that they can invest. That's the reason why the government has gone in for the Eurobond. These are issues that we should understand. That the information provided thereof from the stock market is key, because that information can be used to improve performance. That in the stock market, quoted companies attract competent personnel. Look at the CEOs of those quoted companies in the market. Safaricom, KCB, Equity, Barclays, name them. Look at those companies, irrespective of their various sectors, because there are about 5 sectors. We have agriculturals, we have industry, we have those in finance, we have those in commercial, and then we have the industry. So, companies that participate in this are such that they must be well performing. And this therefore requires competent personnel. To this end, the company is able to know the value of its shares, because at the end of every trading day, their performance index, their trading index, their trading value is published. People will want to associate themselves with such companies because they are assured of profits. People are assured of how easy the shares can be transferred. And therefore it becomes attractive to investors. Safaricom, name them. This is what we are saying. I request for the last time that you mute Amugaga, Ferdinand Magati, Nikano Rotieno, and the group. Please mute. Everybody to mute. I'll not keep repeating myself. Jackson Orenge Getubo, mute. If you feel that you are not ready to attend the class, get out of class. Stop disturbing people who want to follow the class. That is my last warning. I'll never warn any student again. You are in my class, you mute. When you unmute, should be with permission. I'll not repeat myself every now and then. That must be clear to every student. Yo upumbavu mnaongea hiyo sitaki. Cornelius Natembea, Magohametrin, mute. Nasema na nyinyi mnapima imani yangu. I told you I have all the means to access and know who you are. Pima imani yangu, tutaona. That one I promise. Tutaona. Endelea kusumbua. I think I shared with one of the class rep who was in my office on Monday. I have a list of those who are notorious. Na nikupate kwamba una shida huku kufanya kati. Mama yako atakupea kati ufanye. Nimesikia mwingine anaambiwa hapa, cheka tu utadungwa mimba ndio utasettle. I'm not here to listen to that. Can this be the last warning to everybody, the 2,300 of you? I'm handling online. I'll not repeat myself. So, investors like investing in companies that are of reputation. Gaining quotation means the company is reputable. It has a good image. The company is performing well. Is giving dividends that are high. And this is what quotation is all about. So companies will strive to get quotation. They strive to perform well so that they are quoted to participate in the stock market in the country. As we did say, the stock market is there for every country. And we look at it, those main functions, the purpose of the stock market, the 5 are a key. So if this hold the economy of the country for the purpose that we have seen, providing market for buying and selling of shares, spreading of risks, serving as a barometer to measure economic progress, protecting the country against fraud, and providing useful statistical data that is used to evaluate performance. You wish to be part and parcel of that. And that is in itself is the best. So that is what quoted companies are all about. So many times we ask students the advantages of quotation. The advantages of quotation are these same reasons as to why the government must, or the company must seek quotation. One advantage of quotation will be it may raise more capital by floating more shares. It uses information from the stock market to improve performance. It will attract competent personnel. It will know the value of its shares. It's attractive to investors and the issue of the image. But something that has advantages cannot mean to have disadvantages. Because we are saying that quoted companies are well-performing companies only, then a company will be registered if it shows a poor performance record. Look at Mumias Sugar, they were registered. Why? Because they exhibited poor performance record. It's also expensive to obtain quotation because you will pay so much fees, brokerage fees, audit fees, I don't know, legal fees, whatever fees. It's too expensive. It's not easy to gain quotation. Because we said that stock market protects the country against fraud, as the companies quoted in the stock market are required to publish all their accounts. The disadvantage arising from that is that you cannot maintain your secrets as you are required to publish all your dealings. If you fail to publish, then you will be registered. If those investing in you, the so-called creditors, lose confidence in your company, then you have no option other than going under. You have no option other than being liquidated. This is the essence, because quoted companies are well-performing companies only. There is normally very little control of the incoming shareholders who might be influential and can use their influence to vary the policies of the company. Look, for instance, Duncan Wasike has joined that company where you are. William Samoei Ruto has joined. Uhuru Kenyatta has joined. And Raila Amolo Odinga has joined. We are in a meeting. And Raila Odinga proposes. He is seconded by William Samoei Ruto, who will oppose. Because of their influence, even if their decision is wrong. So there is no control over the incoming shareholders who may use their influence to vary the company's policies. That is a very big disadvantage. A very big one. But all said and done, many times we look at under what circumstances may a company be registered from the stock market. Those circumstances of the registration are the same circumstances that give the disadvantages. So we just need to refresh them. Under what circumstance may a company be registered from the stock market? Number one, when it has a poor performance record. Number two, when it fails to pay for quotation by paying such fees as brokerage, audit, legal, what have you. When it fails to publish its accounts. When creditors lose confidence. And influx of new shareholders who may use their vote to influence the company's policies. Those are the circumstances. I say this, you will see others getting zeros, you will see others writing their own nonsense. Because when you are explaining, they are very busy murmuring, talking, and doing their own things. My team Man was beaten thoroughly, and I'm not complaining. Because that is it. Arsenal is doing very well, hitting 4 goals above the minimum and more. But I'm not complaining. Wacha kila mtu alime mka yake. Mimi niko na lima yangu. So as we look at this, ladies and gentlemen, what is it that we should look for now when buying and selling of the shares? What do you look for before you buy shares in a company A and not B? Number one is the nature of the product. I told you of several products: agricultural, industrial, finance and banking, commercial, alternative investment companies, etc. Find out what product do you want to invest in. If it is banking, look at the performance of that bank comparative to others. The second factor to consider before you buy or sell your shares is the performance of the company. How easy is it to transfer the shares of that company? If it is so difficult, then know that that company has a poor performance record. And therefore, if it has a poor performance record, it does not command a high demand of the shares. And therefore, it is very difficult for you to liquidate or convert your shares into cash. It becomes difficult for you. Performance is all looked at in terms of how much are they paying as a return. Is it over the years growing or is it reducing? Look at the dividend payment. That's an indication of performance. You buy shares in companies that are giving a favorable return. Diversification. Diversity means don't carry all your eggs in one basket. Don't just go for Safaricom. Don't just go for Equity Bank. Suppose it collapses, like Imperial Bank, like Chase Bank. Suppose it collapses. What happens? There's need for you to buy shares in different companies, different products, so that you spread the risks and have what we call a wide product mix. So if the agricultural fail, then you have the finance. If agriculture and finance fail, then you have the industry. Look at what happened during Corona. Which companies failed? The industries closed. But the banks were making money through these online banking and transfers. They made money. So if you had only invested in agriculture or in finance or in industrial and the industry is closed, their goods cannot be sold. So you can see diversification is key. Having a wide product mix is key. Don't carry all your eggs in one basket. Diversify for you to enjoy. In case one fails, the other one is there. You invest in a company whose growth rate is favorable. What does it mean by being favorable? We look at this in terms of the growth rate. Are their shares growing? Are the dividends growing? Is it appreciating in value or is it depreciating? Always go for where the growth rate is favorable, meaning the value of the shares appreciate in terms of high dividends. You buy land today, tomorrow it will not be the same. That's an asset that will appreciate. Go for such. And finally, invest in guaranteed securities where you are sure you will not lose. Invest in those of the government. Anything, any trading with the government, however long it takes, you won't lose and you never go wrong. You will get back your money. So buy Safaricom shares of the government. Buy KCB shares of the government. And this is what we are saying. So look at the product, look at the performance, look at diversification, look at the growth rate, and look at the security of the investment. We can invest in anything as long as these factors are considered. So a good company to invest in is based on the performance, growth rate, and security. So invest in a company that is performing well, a company that is showing growth, and a company that like that of the government. So, what is it that we are calling investment? Generally, investment is commitment of funds for purposes of returns in future. We are investing because we want returns. When are we having the returns? Returns normally come in terms of interest, profits, dividends, and what have you. So if you commit your funds today, what do you expect of the funds tomorrow? What is it that you want to look at, to consider as you commit your funds today? 5 things. Number 1, fact 6, return of investment. So what return are you expecting in terms of profits, interest, dividends, what have you? The higher the expected returns, the better the investment. Security of the investment. You must invest where what we did say earlier. We have just said it. Guaranteed securities like that of the government. So, what do we mean by guaranteed securities? You invest where there are fewer or minimum risks for loss. You invest where you maximize returns but minimize risks. Invest in areas that are easy to convert into cash. The degree of liquidity. How easy is it for you to convert that investment into cash? Look for those investments that take a short period for you to get back the initial capital invested. That is the payback. Invest that takes a short period. How about the tax policies? We have seen taxation and how expensive it is. So as we invest, look at those areas whose profits are tax-free or whose profits attract a lower tax rate. Let us not evade and let us not avoid paying tax. Let us contribute to the growth of our country. Let us facilitate the government to meet its obligations, to perform its functions. Finally, the growth rate. Invest in activities whose funds value will appreciate rather than depreciate. Whose funds value will grow based on the performance, the way we saw, based on the return, based on the degree of liquidity, based on the payback period. If we can invest in such, then we will never get it wrong. Let us not focus just on what our professions are. Let us diversify. Let us look around and let us see to it that this is actually what we are supposed to do for survival. Now, I have something challenging here, and I wish, as we conclude the lesson today, I wish to get reactions from some of you. Assuming that Mr. XYZ has been retrenched from his job, not that you will be retrenched, you will be dismissed, you will be terminated, you will retire one time. And you are given 3 million shillings as lump sum. Lump sum means you are given, it's like a handshake as you go home. And you intend to venture into a business. You want to invest. Mr. XYZ is undecided as to whether to invest in matatu business, and he wants to go to 4K. Kitale, Kakamega, Kisumu, Kisii. That's the route. Or buy shares in companies. Can go for Safaricom, those good performing ones. Or build rental houses in an upcoming town. Like Kibabi here, the student numbers are growing. We can put up houses for staff and students. He is undecided on which business to invest in. We have the matatu business, we have the buying of shares, and now we have investment in real income, rental houses. He approaches you with your classmates to advise him on which option he should invest in. What advice would you give Mr. XYZ and why? What would you advise him to invest in and why? You can be unmuted. I want to get responses. Now that you wanted to talk, I want to hear you talk. I want to hear you talk, not just writing. It should be in houses for rentals, build rental houses. Why? The question is why? Hands up. Kama umeweka muziki, Imba sana.
Building rental houses.
Who is speaking? Collins?
Building rental houses.
Come on, you speak up, unmute and speak up.
Building rental houses.
Rental houses, why?
Because rental houses are appreciative things.
Rental houses appreciate. That's yours. Next, Sakla and Makanga.
Yes, he should build he should buy a matatu, invest in a matatu.
Why buy a matatu?
Because people are using them to travel every now and then, so he'll get profits very fast.
So the payback period will be fast.
Yes.
That's what you are saying. Otieno?
Buy shares.
Why go for shares?
Because he will invest.
You speak up, you speak up. You seem to have two gadgets there. They are causing a problem.
Because he will invest in the government.
My brother, sauti yako iko chini sana. Ongeza sauti alafu tukupe nafasi. Okay. Precious Maru.
Captain wa huku juu ataikuondoa.
Precious Maru. Ayuko. Madam
Yes,
Emma.
You should build rental houses
Why build rental houses?
because the rental houses has minimal risk and it's also appreciating very high.
You're gonna content.
Nahashon Odwor.
Okay, sir. The Mr. XYZ should buy shares.
Why buy shares?
For security, then for maintenance of the roads and the vehicles is more expensive. And the
Buy shares
taxes,
because that's more secure.
yeah, and there's no amount that he will put aside for the maintenance of shares. She will just be seated waiting for the
Maintenance. There's very little for maintenance, unlike the houses.
yeah.
This is 0124. This is 0124.
Mr. XYZ, she will build rental houses.
Why rentals?
Because there is a short payback period. The active income they should be
short payback
after
period
every month. Yeah.
So you think rental houses initial capital invested faster? Liwalo Naliwe amepotea. Huntington Obiero.
Yes. XYZ.
Yes.
Should rent and appreciate.
Please mute if I've not asked you to talk. Liwalo Naliwe, proceed.
Empty one.
Wewe ndio unaleta mchezo. Nikanol nimemalizana na Obiero tulimalizana unmute. Anakea. Anakea? Wengine mnafanya mchezo. Metrin?
I will advise Mr. X and Y that he built a rental house.
Yes.
Because it's a long-term investment so that he can make a profit easily.
Long-term investment, that's what you said. Huyu Wanjao aliongea?
No.
Yes?
I'm saying like this, he should build the rental houses.
Yes.
Because he will be able to return the money. It is the rate of return.
The rate of return.
Yes.
So Utahemba? Haemba?
All.
Aundo.
Yes. Okay, for me, Mr. XYZ. I will advise him to build rental houses.
Why?
Because the return investment will be getting profit interest per month.
Yes.
Then look at the tax policy.
Yes.
And the payback period. they'll favor him. And also there's minimal risk.
Josephat Odera.
I will advise Mr. X, Y, and Z.
Yes.
To buy land. To buy land. Land is a fact of production.
It's a fact of production.
Yes, when land is a fact of production, it will never depreciate, especially in Kenya. It will never.
It will appreciate.
Yes.
EDA 0665.
I will advise you jamaa anunue shamba achenge rentals.
Why?
Because they appreciate ni long term investment.
They are only repeating the same reason. You people, man, there are very many things. Nameless. Nameless. Anton Barasa.
I'll advise him to build rentals.
Yes.
Because rentals in an upcoming town it's at high demand.
High demand.
Yeah.
Adam Pieko.
I will advise him to invest in both the three items. That is buy matatu.
Choose one. You choose one.
Okay, I will advise him to invest in.
Obiero, can you mute? Hannington, mute. Diego, we are listening.
I will advise him to invest to buy shares.
Buy shares.
Yes, because the security of the capital will be good.
The security of the investment is okay.
Yes.
Nataka nani aongee tena? Nani anataka kuongea?
Mimi.
Wewe ni nani? Oh, my namesake, talk.
Okay. I would advise Mr. XYZ because it's relatively stable returns over time.
That is okay. Watu wengine kwa hii class?
Tuko tunataka kuongea.
Are there ladies in this class?
Yes. Hey, we are there.
We are there.
The ladies don't want to talk.
We want.
Which lady wishes to talk?
Madam Emma.
To ladies, I want to hear.
Madam Purity.
Emma, talk.
I will advise the Mr. XY to buy the shares.
Yes, that's
and make sure that he buy the shares in different companies to spread the risk and have a wide product.
Product mix, very good. Another lady?
Another lady in the house? Lady in the house?
Any other? You know, tomorrow they are celebrating Women's Day. No, men don't know. You went for your conference just last month.
Yes, sir. I want to talk.
That's who?
Sir.
That's. File dash. Oh, Jessica Fikirini.
Yes, sir. I will advise Mr. XYZ to go for. I'm sure that matter does not cost 300K, 300 million. So he should go for a matatu and then the rest to purchase land. The profit he gets from matatu to build rentals.
And can easily join buy shares too.
Yes.
Uh-huh. Anybody from the YouTube who has a question? Who do you wish to respond? When you have talked, you switch off your microphone and you put down your hand so that we can see those who have not talked and we can give them an opportunity. Okay?
Yes, sir.
Those who have talked, you put down your hand and you do your you mute your microphone. So we can allow 2 more, the last ones. Collins, you talked. Das, you have talked. Figurini, you have talked.
I've not talked, sir.
I gave you an opportunity and you did not talk. Now I have a chance. Ukapotea tena. Das Orenge.
I think Mr. will advise Mr. XYZ to build the rental houses as they doesn't need much maintenance as compared to
maintenance is lower. Oscar Segero.
I should advise Mr. XYZ to build rental houses because there is minimal risks and there is high return investment.
Why is everybody going in for rentals?
And shares, sir.
Yes?
Rentals are more secure.
There's somebody who wants to talk. I have not spotted her. Security.
Yes, sir.
Are you the one?
Yeah.
Please talk.
I was talking about the matatus.
Yes.
Matatus have more disadvantages because they have they are more disadvantaged because the maintenance cost can be higher and cases of risks are high. So I could not advise Mr. Faisal to
Now, do you
go
know
for
that the higher the risk, the more the risk, the higher the return? Are more risky, have the highest return. I said 4K. Kitale, Kakamega, Kisumu, Kisii. That's the route. Now, let me cut the story short as we wind up. What is important is that you need to check what are you looking for in the investment. What factors do you consider in terms of a viable investment? You look at the return. Compare matatu business, houses and shares. Which one gives you the highest return? The higher the returns, the better the investment. Look at the security of the investment. You want to go where there are minimal risks, but the more the risks, the better the returns. Look at degree of liquidity. None of you has talked about it. Payback period, the tax policy, the tax reform, in terms of building those rental houses, doing the plan, having it approved, having the quantity surveyors approvals and inspections. Growth rate, you touched about it. These are the issues that you argue in favor of one project vis-a-vis the others. That's how this should be responded. When you talk of degree of liquidity, which one sells first and which one sells last?
Yes.
Say. And the discussion should center about these 6 reasons. So you can at your own free time continue arguing for and against those projects. And that will give us a better understanding of investment. That's how you should approach that discussion. I'm looking at questions. Why can't you allow me, sir? Nani huyo alitaka tumuachilie tumpe nafasi? Sylvia Moseti. We can give you. Sylvia Moseti. Unataka nafasi na unapotea dada yangu. Sasa wewe unatemanga imani ya. Umeinua mikono mara mingi sana na tukikupea nafasi uongee. Sitaki kuongea. Rental houses. Some of you want to go for rental houses. I don't know why. But it depends on the argument that you have. Otherwise, thank you so much. I want to repeat what I said at first. For those who missed the cut, register with the class rep. Registration number, the name and the reason as to why you missed the cut. I'll have to get those lists by Monday. Class reps deliver the lists on Monday before midday.
Okay.
Number 2, cut 2 is coming the end of this month, the last week. Prepare. Number 3, your exams start mid next month around 19th. Prepare. Number 4, I'm giving a warning to everybody. Wenye mna tabia ya ku unmute mkipiga kelele kwa darasa. I give a last warning. Talk when you've been asked to talk. Unmute when you've been asked to unmute. Those stories za upumbavu mnapiga sometimes are not very good. Kelele yenye mnapiga darasani. Ukiona ya kwamba utaki kuwa class, toka class. Wacha wale wenye wanataka kusikia na kusoma wasome. I give the last warning. Next week it will not be business as usual. Do it at your own risk. Derek Wanyama is asking, I was part of this class last year. Didn't start for the main exam. I didn't know if my cut marks are safe. If your cut marks have a problem, you come and see me. Come and check. I have all the records for all the students I've taught. You come and see me. Sawa? Derek, get that? I'm headed to the office right away. Thank you. We adjourn until next week. Same time. We will conclude numbers and see if we can start the last part of matrix argument. Thank you so much. Pray for my team, Manu. We are really suffering without bitterness. We also need a win. And pray that Arsenal goes slow on hitting people with so many goals. Thank you so much. We are having the grand final of the EPL. Liverpool versus Man City. May the best team win. Asante sana.
Thank you, sir.
I'm also a member of Manchester United. Bye-bye.
You're also a member of Manchester United?
Yes.
Oh, that's great.
Manchester City fan.
Excuse me, sir.
Kuja ofisi nikupigie pole uende ukule lunch.
Excuse me, sir.
Ule shabiki wa sana. Alimeshika sauti sasa ukikuja hiyo sauti.
Manchester United ni failure.
Kati